What's going on, everybody? Welcome back to another episode of the Trade for Yourself podcast. Well, my mission here is very simple. I just want to help y'all learn how to trade and invest in the stock market for yourself. So make sure you please like this. Make sure you please subscribe. Make sure you hit that notification bell to really truly be in the know every single time that I drop an episode. And I really truly appreciate you all, anybody that taps in with me. I really appreciate it because this is a late night edition of the Trade for Yourself podcast. Okay. It's after, 9 p.m. Central Standard Time. So it's pretty late. But at the end of the day, the information has to be talked about. And I can't go to sleep. I literally cannot go to sleep without tapping in with y'all and without giving you all the information that you need because this is very, very important. This is very, very important for us to really truly explain this because the market is doing some things that it hasn't been doing, right? It's doing some things that it's not accustomed to do. You know what I mean? In terms of how far it has went down. So if you just give me one quick second, give me one quick second and give me the opportunity to be able to just share this link out real quick to the people that need to see it. Um, we can go ahead and get into it. We can go ahead and get right into it because we have some things that we need to discuss about what has been going on in the market. Okay, so first things first, let me go ahead and share my screen. Let me go ahead and share my screen with you all. And there's two particular articles that I want to break down real quick for everybody. So the first thing relates to the global chip stocks from Nvidia to ASML. They fall on geopolitics and Trump comments. Now, what happened today was that global chip stocks fell sharply with ASML, Nvidia, and Taiwan Semiconductor posting declines amid reports of tighter export restrictions from the US and a ramp up of geopolitical tensions fueled by comments from former US President Donald Trump. Now, ASML's Netherlands listed shares were down 11%. Okay, they were down 11% today in one day, while Tokyo Electron shares in Japan closed nearly 7.5% lower. ARM, AMD, Marvell, Qualcomm, and Broadcom, all of them closed down more than 7%. So there were several stocks that were down significantly. Okay. These moves came after Bloomberg on Wednesday reported that the Biden administration is considering a wide sweeping rule to clamp down on companies exporting their critical chip making equipment to China. Washington's Foreign Direct Product Rule, or FDPR, allows the U.S. to put controls on foreign made products, even if they use the smallest amount of American technology. And this can affect non US companies. CNBC has reached out to the U.S. State Department, the Bureau of Industry and Security, and the Office of the U.S. Trade Representative for comment on the report. Now, ASML stock drop came even after it reported earnings that beat market expectations for the second quarter. However, 49% of its sales over the period took place in China, highlighting how much is at risk for the firm, even in the event of tighter restrictions. Now, ASML makes the machines that are required to manufacture the most advanced chips in the world. This company is very, very important for manufacturing chips. Now, comments from Trump, a Republican, added further negative sentiment to semiconductor stocks. Now, the former president said that Taiwan should pay the United States for defense in an interview with Bloomberg Business Week published on Tuesday. He also claimed that Taiwan took about 100% of America's semiconductor business. Now, the remarks have thrown doubt over the United States' commitment to defend Taiwan if Trump becomes president. And in the event of an attack by China, which sees the democratically governed island as part of its territory. Now, the Taiwan listed shares of Taiwan Semiconductor closed down 2.4% on Wednesday, but they were down pretty significantly. The geopolitical tensions also weighed on chip stops in the U.S. The Van Neck Semiconductor ETF, ticker symbol SMH, one I'm going to talk about tonight, closed down over 7%. Supermicro, Computer, and Applied Materials were among the other U.S. listed laggards in trading. Now, you have to understand that politics affect the market, right? What happens in the economy affects these companies because of several different reasons, right? What the Biden administration is proposing, they're proposing that United States companies cannot export their critical chip making equipment to China. So, for example, Nvidia, right? Let's say Nvidia has some GPUs they're working on, high performance GPUs, but they can't go to China. AMD has some GPUs, but they can't go to China, right? All these different things. That's what's going on. That's affecting the market, right? TSM creates over 90%. Okay. TSM creates over 90% of the advanced chips that go on, that pretty much go into all the semiconductors into the United States. Okay. They make over 90%. They manufacture over 90% of the advanced chips in the world. Okay. In the world, right? Now, we know and we've been known that China has been threatening to advance, right? Threatening to invade them. But the United States has been on the record saying that they would come back to defend Taiwan. But we know that President Trump and President Biden, we know that they are vying for the White House, right? And we know that if Trump were to become the president, he is saying things that can affect the market, right? In terms of, he says one thing and then the market, they may price something in based on what he said because of the things that we know affect the market. We know that TSM is in Taiwan, and we know that if they got invaded, we know that would affect the market. But here's the thing, y'all, and this is what I want you all to understand, right? We've known that the Biden administration has wanted to restrict chip making technology going to China, right? We've known that TSM is in Taiwan, and we've known that China can invade and probably does want to invade. We don't know when it's going to happen, but we do know that they want to invade Taiwan. We know this. But in me saying that, we've been known it, right? This has been affecting the market. So me seeing these stocks down this significantly in one day, it's not really scaring me. It's not really making me think that, okay, we're not in a bull market, right? Because at the end of the day, profit has to be taken in a bull market. We really truly need days like today in order to be able to secure the bull market, in order to be able to have a bull market. This makes a market. A market is made up of buyers and sellers, so you need both of them in order to be able to make a market. So this is what's going on with the chip stocks. Now let's talk a little bit more let's talk a little bit more specific about what happened today. Like, let's put today into context, right? Let's put today into context over a few years. So stock futures rise slightly after Nasdaq's worst day since 2002. Okay. This was the worst day for the Nasdaq since 2002. And in 2022, excuse me. And at that time, we were in a bear market at that time. So again, US futures, the futures market is up a little bit right now. It's up a little bit after the Nasdaq Composite's worst session since 2022 amid investors' rotation out of big tech high flyers. The Dow Jones Industrial Average is up 68 points. The S&P 500 and Nasdaq are both up 0.2% and 0.32% respectively. In extended trading, Discover Financial popped 3% after its second quarter results topped expectations. And Beyond Meat, that was a very, very interesting stock back in 2020, is down 16%. It's down 16% after the Wall Street Journal reported, citing people familiar, that the meat substitute company is meeting with bondholders to begin discussing about restructuring its balance sheet. That's not very good, y'all. That is not very good, but we'll talk about that later. The rotation continued Wednesday during the regular trading session. The tech-heavy Nasdaq tumbled 2.8% in its worst day since December of 2022, closing below 18,000 for the first time since July 1st. The S&P 500 dropped 1.4%. So you know that we had a bad day in the market. However, the blue chip Dow, which has less exposure to the tech trade, and the other two indexes outperformed. The Dow went up 243 points, closing above 41,000 for the first time ever. So the Dow made a record high, but the S&P 500 and the Nasdaq were down pretty significantly. Now let's see what this article is telling us. The article is saying that Wall Street has been dumping shares of this year's artificial intelligence beneficiaries, as the growing likelihood of a September rate cut bolstered optimism in the broader market. The Russell 2000 declined 1% on Wednesday, but the small cap index has jumped more than 9% in the last 5 days. The Russell 2000 has been going insane, right? The chart is literally vertical. I'm telling y'all. And investors have been hoping for a broadening market amid concerns that the tech-driven rally is running out of steam. However, some expect the change in leadership may not be enough to protect stocks from challenges ahead, including the possibility of an economic slowdown. This is a market, a Fed pivot market 2-3 months before we expect a cut, exactly as we'd expect to see it. A lot of uplift in areas like small caps, other areas of the risk market where capital is really unlocking. Lauren Goodwin, chief market strategist at New York Life Investments, said Wednesday. But the reality for the market is that we've already been in a soft landing for the next 9 months. And so as we look to why the Fed is cutting rates and the market starts to catch up with that reality, might be a couple of months from now, but we expect that the economy is still liable to slow. Okay, the economy is still liable to slow. On the economic front, jobless claims for the week ending July 13th are due Thursday morning. Economists are expecting claims to come in at 229,000. That's up from 222,000 the week before. So jobless claims are actually increasing. As for earnings, Domino's Pizza and Alaska Air are set to report Thursday before the open, and Netflix is expected to report results after the close. So that's something that we need to pay attention to. Netflix is actually on my list. Netflix is actually on my list for us to check out. Now, I was going to go directly into the charts, but I have to go to this real quick here, y'all. I have to go to this real quick here, and I need to see where this fear and greed index is, right? So the fear and greed index is the index that drives the market, right? It drives sentiment. It's the index that drives sentiment in the market. Okay. What does that mean, right? That means, how do we feel? How are investors feeling about the market? And right now, sentiment is at neutral. We're at neutral in terms of the fear and greed index when we were just at 63. So we dropped 9 points, right? It's pretty significant. So right now, the market is not greedy. It just had tilted over into greed, but now we're back into neutral because of that down day that we had. And that's just one thing I wanted to show you all real quick before we go into the charts, because I have to go into the charts because there are some very, very interesting things that we need to see on these charts. Now, the first chart I want to talk about is QQQ. QQQ tracks the Nasdaq 100, the index that was down more than 2%. Okay, that is what QQQ is. Now, this is a year-to-date chart of what QQQ has been doing since the beginning of the year. QQQ is up substantially. This stock was as low as $394, and it got as high as $503.52. Now, if we get a little bit closer, We can see that we had this red day being down. QQQ is actually down 2.94%. It's coming down. We've got a bearish engulfing candle. That means we're bearish. We gapped down and we're continuing to press down. Now, if you look at this chart, where could we find some support? We're kind of getting into an area of accumulation a little bit right up in here before we took that leg up. We got this 50-day moving average right here, but we have a gap right here. We have a gap right here right at 468.02, right? We could potentially come down to this gap, right? This is potential. This is a potential situation, right? We could potentially actually come down and hit that 468, that 468. Now, I don't know if that can actually happen. We would need to have some more negative days for that to happen, right? For us to really truly come down here to this 468, we would need to lose another 13 points, right? In order for us to come down here. And if we were to come down here, this will be a very, very good place to buy. Especially if you want to trade, you're trying to take something back to the upside because of how the market has been performing. We're still in a bull market. I'm not concerned. I'm only looking for opportunities to trade these stocks back to the upside, targeting this $503.52. You know, now it seems that we have a not a demand zone, but a supply zone in the sense that we're talking about on the daily chart, right here, we made this high. We had an all-time high 1 week ago, and then we immediately sold off, and we've been selling off since that time. How do I know we're in a supply zone? A supply zone is when you get into an area where you have a small green candle before it, and then you have a red candle coming right after it, signaling that people are dumping supply, right? They're adding shares to the market. We saw that we had, a little bit of playing around here, and then we dropped again, right? So we're gonna need to see, okay, what is trading gonna do? What is trading gonna do tomorrow? What is trading gonna do Friday? Because that's gonna tell us a lot of information that we need to understand. So we need to watch QQQ. Okay, let's go to XLK now. Let's go to XLK. Now XLK is similar to QQQ, except that XLK only has technology stocks in it. It's only technology stocks, and they're only in the S&P 500. But this is another one, we see that supply, right? That supply right here made that all-time high, and it's been dropping, and it's dropping down. Now, XLK doesn't have to go as far to get down to where I would like to get it. We're talking about this 220 right here, right? We've got 220. We've got a gap here between 222 and 220. And that 220 actually coincides with the 50-day moving average. So this would be a very, very good area to buy XLK. Very, very good area. What's in XLK? Nvidia, Microsoft, Apple, AMD, all of your technology stocks in the S&P 500, they're in this. XLK is getting to an area to where I would like to entertain it and take it back up to the upside. But again, we're in that bearish engulfing. So we need to make sure that we're ready to turn around, because we don't want to buy these too early. But this is one that you definitely need to have on your watch list, taking it right back up to 238, right? That's pretty much what we're trying to do. Okay. What's the next one? This is the big one, right? This is the big one. This is the big one that really took a hit. It was down 7% today. It's the chip stocks, right? It was the TSM when Trump was talking about TSM and Biden was saying that, hey, we need to restrict things going to China and all this. The stock's down 7%, right? But it's down 7%, but at the same time, look at where it's coming down to. It's coming down to the 50-day moving average. It's coming down to a previous high that it has had. It's coming down to an area where we were doing a little bit of basing. And SMH is one of those stocks that moves very, very quickly. It comes down quickly, but it can go up very, very quickly. This stock is going back to $283.07. It's going to happen. It's just we have to give ourselves enough time in order for that to happen. This is a very, very interesting area for me to be looking into a potential position for this stock because SMH has everything, right? I'm going to talk about, I'm going to go through a whole bunch of charts. I'm going through pretty much every semiconductor stock that I actually care about right now. They're all in SMH. So if you if you have a concern over, I don't know if I should buy TSM, or I don't know if I should buy Nvidia, or I don't know if I should buy Broadcom or whatever, just go ahead and come down here. Just go ahead and go ahead and trade this SMH. If you trade this SMH, okay, that's really gonna put you into a position to where you can be successful. All right. So those are three that we know that we have an opportunity to be able to trade. All right. What's next on the list? TSM, right? TSM, Taiwan Semiconductor. This stock gap down more than 7%, but it's been running. It's been running and it's coming back down to areas where I am getting interested. Came back down to an area of it was a previous high, came back down to that area. We're kind of close to this 50-day moving average. The one thing I want to tell you about TSM though, that we have to take into consideration is that we have earnings for TSM. We have earnings for TSM that are going to be coming out in the morning. Okay. Earnings for TSM that are going to be coming out in the morning. Right now, the stock is up 1.54% overnight. So the stock could be up significantly in the morning. We don't know, but this is one of those ones to where we look at, we say, okay, this may provide us a pretty good opportunity to be able to get in depending on what happens during earnings. Now, I'm expecting earnings to probably be okay, but TSM is one of those ones that's been running. It dropped on news, which could provide us an opportunity to take it back up higher. All right, let's go to Nvidia. Okay, Nvidia, the stock of the year, right? Running, but it hasn't made a new high in over a month. Well, not over a month, but almost a month. It's almost been a month since Nvidia has made a new high. That's a big deal. That's a big deal. But also, where is Nvidia technically? Nvidia is coming down to the 50-day moving average, which Nvidia hasn't been down this close to this 50-day moving average in some time, which also coincides to a support level, right? We had previous resistance here in May. So this tells me that this may actually be a pretty good area to buy. This may actually be a pretty good area to buy to be able to get into Nvidia and take it back up to the upside, right? But we need to see, okay, what's trading going to do tomorrow? What are we going to do Friday? You know, for my podcast listeners who's going to get this recording, just continue to pay attention to what's going to be going on in subsequent trading days that's after a big day like this. What are we going to do after a day like this? That's going to kind of give us some information to kind of say, okay, are we diverting this trend, right? Are we diverting from this trend? So Nvidia, again, great level. We're gonna make another high on Nvidia this year. Like I just believe that will happen. Um, here's AMAT, ticker symbol AMAT. This is Applied Materials. Applied Materials was down 10% today, right? It came down more than 10% on this news. But what has got me excited? What has got me excited is that we have a gap right here. We have a gap right here. That's a gap. We have a gap. This stock gapped up in the beginning of June and it kept running. But guess what? Now we're coming back down and we could be ready to, we could actually get into this gap. We could bounce off the top of it, or we could come on down into this gap. Now, if this is a big if we came on down and completed this gap fill, that would make me feel very, very good about getting into this stock. Why? Because this gap would be filled, A, and then B, we would be retesting previous resistance that is now turning to support. Now we're coming back to a very, very key level, right? To be able to buy this stock and take it back up to the upside. We're talking about an over $30 move that we're talking about to take this stock back to the upside. If we can get it to come back down to 214, that's a great area to buy right here to take it back up to the upside. But you need to be paying attention to this one because this is one that has been running, is cooling off. This is one that could provide us an opportunity. All right. Qualcomm, okay? If we look at Qualcomm year to date, Qualcomm year to date has been running crazy, but now it's in a downtrend. It's in a downtrend. We're coming down. We came down to 193, came back up to 210, and now we're back down to 191, right? So we may look at it and we may say, Qualcomm is in a downtrend. We may be kind of fearful of it. But let's go to Qualcomm on a weekly chart. What's going on a weekly chart? Well, what I see on a weekly chart is that we are retesting previous resistance back here. We're retesting previous resistance back here, late 2021, early 2022. So this could just be a technical situation to where we're just coming back down and we're just retesting this previous resistance. This stock is in an uptrend. It's in a clear uptrend. It's just we may be coming back down to retest previous resistance. So this is another area, another stock that definitely intrigues me. This is another area, another stock that definitely intrigues me. Okay. Okay. What's next? AMD. AMD, ticker symbol AMD. AMD was another stock down 10%. It was down 10% today, 159, but the stock was just at 187 just a couple of days ago. This stock is going to get back on that uptrend. It's just giving us another opportunity. If we come back down to the support level again and retest it again, y'all, that could be a retest in combination with the 200-day moving average. That is an area where you need to be looking at getting into this stock, which also coincides with the previous high as well. So AMD is definitely one of those ones that you need to be looking into. Okay. CrowdStrike. Cybersecurity company got inserted into the S&P 500, right? The stock actually gapped up on that news. It gapped up on that news of it being inserted into the S&P 500. But guess what? We've came back down and we have now filled this gap. We have came back down and we have now filled this gap. Now, this is the time where we have to be considering getting into this one and taking it back up to the upside because we've pulled back. This stock is going to go to $400. I'm not even worried about that. This stock is going to $400. All we have to do is just give ourselves enough time to be able to take advantage of it. The last one of this group, AVGO, ticker symbol AVGO Broadcom. This stock just had a 10-for-1 split. This stock is moving very, very similarly to how Qualcomm was moving. This stock is moving very, very similarly to how Qualcomm is moving. Well, this particular stock, right, it gapped up. It gapped up right here. It gapped up significantly after earnings. Well, what if it decides to come down and complete that gap fill? That's another area that you may need to be looking into as an opportunity to trade. Okay. Like, understand that these semiconductor stocks and also CrowdStrike as well, they're providing us opportunities. So go back through the stocks I was talking about, look at those charts, and you can really truly see those levels. Let's go into the next group. And this is going to be my last group of stocks. This is going to be my last group of stocks that I talk about. Apple. Okay. Apple. Right. Apple broke out. broke out from this 197 and just went to 237. Didn't even bat an eye. With up $40 and didn't even bat an eye. Well, now it's pulling back a little bit. So it's a little interesting to kind of see, okay, it's been running so crazy. Let's see what it does when it pulls back, right? Let's see what it does when it pulls back. That's another one that could give us an opportunity. Microsoft, ticker symbol MSFT. Okay. Hit 468, but now it's pulling back to about the 50-day moving average. 430, 430. What is that? 433. That was a previous high that it made. Could come back and retest that. That will be a very, very good area to take it back up to that upside. Okay. What's next on my list? What's next on my list? Google, Alphabet. Alphabet, another stock that's been running. But guess what? It's pulling back. 50-day moving average, previous high. Like, y'all should be seeing the pattern here. Y'all should be seeing the pattern here of what's going on. Amazon, okay? Amazon, another stock that has been running. But let me show you this. This stock has been running, but I drew this trend line, right? I drew this trend line, and Amazon may be coming back to touch this trend line. 3 touches of this trend line. This is bullish, y'all. When you see a trend line moving like this, and you can have 3 touches on that trend line, this is an opportunity right here to take this one back up to the upside. It's going back to $201.20. It's going to happen. We just have to give ourselves enough time for it to happen, but it's going back to $200, y'all. Like, it's going to happen. This is another one that you need to have on your list. Ticker symbol ZS, Zscaler. Zscaler, cybersecurity company. Company actually broke out, but now is doing a little bit of consolidating. It's doing a little bit of consolidating. It's pulling back to a previous high. We actually hit 191 on Wednesday. Now we may be coming back to retest that a week later. Okay, but this stock is clearly in an uptrend. It made the bottom that it was going to make, and now we're back in that uptrend, right? Okay, let's stay in that cybersecurity realm. Palo Alto, Palo Alto Networks. This is another stock. From a year-to-date standpoint, it's been very volatile. From a year-to-date standpoint, it's been very, very volatile. But guess what, everybody? Guess what? It's been running. It's been running. It made this low back in February, but made this low back in February, made a double bottom. Now it's been running. Hit resistance, broke out. Now we got a bull flag. We have a bull flag on Palo Alto Networks. It came pulled back to previous resistance, bull flag. This is one of those ones. It's at 332 right now. It's going back to 345. It's going back to 345, and it's also probably going to appreciate and probably go back up to 360. So this is one of those ones that's bullish right now in the middle of a pullback. It was only down 1.88% today. That's one of those ones you definitely need to be tapped into. And let's look at Chipotle. Let's look at Chipotle. What is Chipotle doing? Now, Chipotle, this is a stock that just had like a 50-to-1 split. Stock's been going insane. We can look at what's been going on from a year-to-date. Year-to-date, the stock has been going insane. But now we're pulling back substantially. And guess what? We're pulling back to a previous high. We filled this gap. We're coming down. Okay. This stock wants to come down a little bit more, I think, because we're down 4%. The stock is just falling. But this is one of those ones that could again provide an opportunity once it settles out. This is just a situation to where the stock split. Investors wanted to take profit. It's been running consistently, probably for about 2 years straight. But now we're getting to a point to where investors want to take profit, and that's okay. That makes a market. But as you're looking at these opportunities, you need to look for these opportunities to be able to get into them to really, truly be successful. Last one, Shopify. Shopify. Shopify is the last one that I'm going to talk about. Now, Shopify, if we look at it, Shopify made a bottom right here around $56. It made a bottom around $56. This is a demand zone that I had and a trend line that I had. But now it broke out and now it's basing. It's basing and it's forming a bull flag. It gapped up on yesterday, but it came right back down today, right? To come back and retest this particular area that I'm calling the bull flag. This is one of those ones again that you may need to look into because this is one of those ones that you could tap in with and you could actually make some money, at least take it back to $70 because that's exactly where it wants to go because that's exactly where it came back from, right? That's exactly where it came back from. So, if you paid attention to all of those stocks and you looked at what was going on, it was a pattern. A pattern was identifying. Stocks are pulling back to certain levels. Stocks are pulling back to certain levels, and they're pulling back to those levels to get ready to go higher. You need to go into these particular stocks. You need to look at these stocks and you need to look at them. You need to say, hey, what am I gonna buy? What am I going to trade? What am I going to invest in to take it back to the year-to-date high? This is what we're trying to do, y'all. We're in a bull market. We're in a bull market. So we're going to continue to go up this year. We're going to continue to go up this year. But now, what do you need to do? You need to take advantage of what Trump is saying. You need to take advantage of the Biden administration saying that they're going to enact certain policies and those policies are now bringing these stocks down. Well, guess what? They're bringing the stocks down, which provide an opportunity for us to take them higher. Again, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like this one. I know it was late. I know I was long-winded. I know I put a lot of stocks out there. I know I put a lot of information out there, but that's what's important. What's important is that you got the information, and what's important is that you can come back and you can rewatch it before the market opens and put yourself into a position to be successful. I appreciate you all. Thank you for tapping in. I'm going to see y'all next week. And remember, don't pay for it, trade for it. I'm going to tap in with y'all later.